The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Hello, everybody. This is Mark Longo from the Options Insider Radio Network, and I'm breaking into your regularly scheduled programming to let you know about an upcoming event that I think is going to interest quite a few of you. It's called The Future of Options Trading, Finding Edge Outside the Pit, and it's going to be held on November 5th here in Chicago. This is the inaugural conference from the Options Alliance, a new industry trade association that I am privileged to be a part of. And this conference will address the numerous issues facing the fastest growing segment of the options market, namely options entrepreneurs. So who is this event for? Well, if you're a current or former market maker and you're looking for some ways to leverage that unique skill set in some exciting new areas, well, then this event is for you. If you're an aspiring entrepreneur and you're hoping to learn a little bit more about the options market, which is the most dynamic segment of the financial marketplace, but also can be a little bit intimidating, well, then this event is for you. And if you or your firm are looking to expand the reach of your products or services by learning more about the unique needs of options entrepreneurs and new startups and new ventures, then this event is definitely for you. We've got a lot of great speakers lined up covering a wide array of topics, including how to leverage that trading and market making mindset and skill set into other unique opportunities, also overcoming the typical roadblocks and stumbling blocks that may lay in the path of a new option startup or entrepreneur, and of course, perhaps most importantly, how to promote and market that new option startup or new venture that you're planning. Now, I've been to my fair share of options conferences, so I could say with some certainty that there's never been an event quite like this. Take advantage of this unique opportunity to meet with and learn from the entrepreneurs who are out there doing it, building new businesses, starting exciting new ventures in the options market. You can learn more by surfing on over to www.optionsalliance.org and then clicking on the event sign-up tab at the bottom of the page. A lot of people say that their space is limited, but we really do mean it. So if this event interests you, reserve your seat today. Thanks for listening, and now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block. This is your guest host for today, Mike Tosaw. I always know how Jay Leno must have felt back and Joan Rivers must have felt back in the 80s when they were filling in for Johnny Carson, because I am filling in for the Johnny Carson of option trading, Mark Longo. With us today, allow me to introduce to you our first guest and our usual cast of characters, Mr. Andrew Giovinazzi. Andrew, how are you today, my man?
I'm well, Mr. Tosaw. I appreciate you having me on the show again today.
Well, seeing as it's not my decision, but because if it was up to me, well, never mind. We can talk about that another time.
I know. Mark made you do it. He did. I know. I heard the call. You got to have Andrew.
He had a gun to my head. That's the way it goes. So
no Sebastian though. He's in an undisclosed location for Option Pit. this week.
Well, that's kind of the way it goes. It's like the Supreme Court justices. Not all of them can go to when the president speaks in front of the House. You can't have all of them there at once. So it's kind of like with you guys. One of you has to be undisclosed at some point at all times.
Exactly. Like Cheney, kind of, when he was in the back in the old days when there was still terrorism and stuff. He had to go, what was he in, that bunker or something, the undisclosed location?
Yeah, he was in a lot of places, that's for sure. Speaking of a lot of places, this market's been in a lot of places this week. What do you think of this VIX? We go up to 90, we go down to negative 30. That kind of seems like what the range feels like. What are some of your thoughts on this?
Well, we...
Maybe I exaggerated those numbers slightly. But
it feels like that. Now, we had it definitely had the feel of the world was going to end. Eventually, the politicians one of these days are actually going to not solve this problem one of these days, I think. They're going to just do, what? We thought about pushing it to the last minute, but you know what? We're going to just we're not going to deal with the debt limit and see what happens. Let's just give it a kick.
Speaking of giving it a kick, Google is up $43 right now. I don't know if you saw that or not. Google is
up 43.
Yeah, it's up $43 in aftermarket. Q3 revenues.
They're making money.
Yeah.
Hey, that's good for the old ATG Children's College Fund. I think you got to own Google. That's a kind of a dip buyer, but that's a side ring. So volatility-wise, I think the big story for vol is, at least from our point of view, we expected vol to come down this week. We kind of positioned for it. Could have traded a little better, but for the most part, yes. We thought it was going to come in. It is now starting to kind of get to the bitter end for VIX, though. Maybe one more full handle in VIX cash. I don't see it going much lower than that in the QE era. I don't think it has traded below 12.5 maybe once in the last 3 years, based on this kind of sustained basis. So it might have dipped down there for 3 or 4 days, but not past that. So, I think we're looking at kind of the bottom in volatility. And then obviously the trades that occur when you're at that low level. So, but I don't see it going down too much more. I thought 13 VXX was possible probably by tomorrow. It just happened all today.
Yeah, that was because we dipped into the 12s for a little bit today. Not for long, but we were in the 12s for a little while. And this is definitely, I'm getting the feel that we're at a pretty low area in the VIX myself.
Yeah, it's just getting down there. So they, I think it was a good day to close short vol positions. Looked at some other stuff, but not quite to the same, I would guess, same intensity as we had over the last couple of weeks. But, we still have kind of the QE on the table, off the table. I think part of the euro rallied hard against the dollar. That's usually kind of given, I think that might have been a lot of short covering on the euro part, just sort of, seeing what might be happening after post-budget crisis. But, it's close to an all-time high. What can you say? If we didn't trade one today, we're pretty close. With IBM,
I think we closed at an all-time closing high and 13-year closing highs on the NASDAQ as well. So I want to just remind our listeners, just as always, not that this is a sentiment. I'm more than happy to say my sentiments. I'm actually bullish. I personally think this is going to continue for a little while, although the short term, don't know. But I am bullish going into the end of the year. But just a reminder, just with the money that you've made so far this year, I know I've said it before, there's never been a better time to sell in the history of the stock market than right now. Well, maybe
or calls.
or that. So, anything else that's hot on your radar screen today, Mr. Andrew?
No, the composite 3863. I remember, where was that? Like 1200, not very long ago. In 2000, when it just totally crashed, and I'm clearly within a year, probably it'll be over 4,000 again. So, if this keeps up. So it won't take much. It's a tiny percentage away instead of a big percentage away.
Yeah, the percentages keep getting smaller.
They do. They keep getting smaller.
Yeah. The only other thing that came up on my radar screen today was my beloved metals. Gold went up. We've been keeping the upside open on this, and I'm looking to probably sell some calls against it now in the next couple of days, most likely. But with it, I think that this is kind of a reaction. From everything that I can tell, this is a reaction to the Fed saying they're going to continue the printing press or continue buying the bonds. And I think that gold's reacting to it. So
Yeah.
I think
So
that.
did they actually give a date, Mike? Because I was trying to do, I can't watch too much news during the day. It kind of freaks me out. I got to do it on the close. But do they actually give a solid, like we were thinking about tapering, but now we're not because, Congress kind of messed us all up. Is that kind of what they're thinking, or?
Yeah, that's what I saw today. I forget one of the Fed chairmans or one of the Fed chiefs actually did say that. It wasn't Bernanke himself, but one of the other guys did say something to that effect, and I think that was one of the drivers of the metals today. And even if they ever say they're going to give a definite date, it's the government, so it'll be a definite maybe.
No doubt. I don't disagree with the bullish thing. The only reason why the market looked so weak anyway was was this first we had Syria. It's kind of always that 1-2 punch. Syria, everybody's a little bit freaky, and then all of a sudden they do the shutdown, and then everybody starts to worry, and that tends to tank things. So what's the next 1-2 punch? I guess look out for the next debt. The next the next cage match going on for Congress. What is it, 3 to 4 months down the road? So until then, it's just. And actually, earnings really sort of ho-hum. I mean, IBM reported poorly. Obviously, Google good, but it's not like they've had great top-line growth in revenues either for the S&P 500 stock. So we'll see how that goes.
Yeah, and with Goldman and IBM did kind of surprise me a little bit today with how they were. I mean, we don't have any positions in either of them, but I just kind of watching them on the news. Wasn't quite expecting that type of a reaction on the stock like we had, or that type of an announcement like we had.
Yeah,
but such is life.
Such is life. That's what we got.
Yes. Anything else before we dive into the odd block?
No. I've got calls to write myself and stuff like that. So again, very surprised at how low, and now volatility in the VIX, I'll just tell you, went from 110 on Monday to 64% today.
That's an impressive move.
Totally annihilated. Right? It's actually right now, 30-day volatility is at the 6-month low today.
That's impressive.
You can buy all the VIX options you want for pennies on the dollar. It's certainly a good day to close any short VIX options.
I would think so, yes.
That's just me, though. But hey, what the heck.
All right. Well, that will conclude the trading block. Let's dive into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
Welcome to the Odd Block, everybody. This is the portion of our show where Andrew is going to enlighten us on any unusual activity, any odd things that happen, and things that just kind of scratch your head. And to quote a former 90s song, things that make you go,
Was that in the 90s?
I think so, yeah.
It was in oh my gosh. I'm dating myself already. It was in the 90s. Things that make you go, CNC Music Factory, I think.
That's right. That's right.
So what do we have? We've got Ingersoll-Rand IR symbol trading 63.35 today. It reports tomorrow before the open. There was some heavy activity in ACA 65 calls. And, surprise, surprise, traders bought over 5,000 in the ACA, 65 calls, paying up to 62 volatility, which is about 50 cents. For a name like IR, that's a substantial pop buying those. It's not a huge mover on earnings. So obviously looking for some pretty decent upside. Nove calls We're trading actually around 25 volatility. All were purchased. Very, very, very solid call buying activity and almost no put buying activity. So, definitely sort of a one-way market for calls in there. So looking kind of bullish in Ingersoll-Rand. But as you hear this, they will have reported before the opening. But that's why you check the Option Insider website, as Mark would say, so you could play along on all you home gamers that look at the website and take a look at the activity prior to our odd block or option or odd block report. Okay, so coal, here's another one, kind of a funky one. COLE, not the shoe guy. What is that, Cole Haan or Michael Cole or Michael Kors? Anyway.
Michael Kors.
Kors. No, but Cole Real Estate Investments, trading 1242, reports earnings on the 15th of November, so it's about a month away. This is what we'll call a trade by appointment stock, which means there's a very, very light volume, very, very low ADV in it. And a customer bought 10,900 of the NOVE 12.5 calls, paying 35 cents. Pretty bullish trade, right? That's only 7 cents out of the money, so it's a low vol stock, trading around 30% volatility. And also, traders are paying a nickel for the 15 calls. So the 12.5s are trading in size, and then the 15 calls trade a nickel, probably for risk control. Looks pretty bullish on a stock that doesn't move a tremendous amount. I don't see them buying the 12.5 calls and kind of selling stock against it. You would just probably go buy puts. That would almost be like one step. Well, that would be one step too cute, I think. And we really didn't see any stock go up to match essentially the calls. But the calls were buying, and again, looking kind of bullish. So the symbol there is coal, a real estate investment truck. Maybe all these real estate investment trucks are going to come back because, if QE lasts longer, I can't believe it. Doesn't the Fed run out of money eventually? I guess
if they haven't yet, I don't see how they can.
So maybe the real estate investments trusts, after getting kind of beaten up this year, come back into vogue. And think about if you're a money manager and you look at a stock like coal, and all of a sudden, you're holding all kinds of other names that are, trading at 1-year highs, and you're like, well, maybe I need to find something that's going to, perform for me here at the end of the year. Maybe this, VXX is trading below 13 after the close. That is unbelievable. Unbelievable. I'm just pulling up a chart here of coal again, just to.
Yeah.
And they are just crushing this stuff. Yeah, actually, it's making kind of it hasn't burned the house down this year, but it actually is making a 1-year high as a real estate investment trust. So maybe it's got something a little special to this particular stock.
Somebody's excited about it.
Somebody is excited for it to go higher. That is for sure. And the thing is, low volatility stock. Calls are generally a better buy in a low volatility stock. You don't have to pay very much for them, and they tend to perform okay, right? It doesn't take much for the stock to move the options.
Yes.
Our next stock is Seadrill, SDRL, as in go out in the ocean, and Seadrill. I'm going to guess this is an oil driller. And it looks like somebody was covering some OC 47 puts that they closed, and they rolled it back to November on a slight ratio. So they bought in some short OC 47 puts, 5,000, and then they sold an additional 6,400 of the NOVE 47 puts for about $1.72 on a 20 volatility. Here, let me see here now where Seadrill is trading right now after hours. Okay, so what this could be actually is the 47 puts they closed, probably were too aggressive selling them, although Seadrill has been lower than this level for most of the time. So it's very close to a 1-year high here, or a 6-month high. So they sold the 47 puts for decent money. Now they're selling the OCK 47 puts. Now they're rolling into the no 47 puts. And I think what they're trying to do is just grab a little juice on top of, they basically, this to me looks like they want to own Seadrill, and they're going to sell puts that have about $1 worth of premium, actually about 74 cents worth of premium in them. And I think that's like a Tosaw special. You want to buy the stock, but you buy it $1 cheaper than where the market is right now. And that's
I love it.
I know. So that's one of the best ways to use options. You want to buy stock. If you sell an in-the-money put that actually has some decent premium in it, you can essentially buy stock below the market. Okay? And that is, I think, a perfectly acceptable way to buy any stock. Always cheaper than the listed price, makes me happy. So, again, this is just, I think, a trader that wants to maintain a long position. And, again, I would say getting aggressively long by selling these puts. Last, we have a trade, Real Goods Solar Inc. And I'm pulling up the ticker symbol now. Real Goods Solar Inc. RSOL. Okay. And I thought this was kind of an exciting one. This is a solar stock, and it's a stock that was up $1.14. It's now trading about $3.91, but it was up $1.14 today. That's a pretty big move. It's like 40-something%, right? 43%. Options are trading all over the place. RSOL. One customer rolled out of a big winner on the 2.5 strike in Jan 2014. So basically selling out long calls that made a ginormous return. And now traders are also starting to sell the NOVE and April 5 calls, probably looking at a buy right of sorts. So again, traders taking money off the table, but long stockholders definitely taking the earnings call and writing calls against it on the big jump up. So maybe, this is a stock that might have a little more room, but long holders are definitely taking some money off the table and rolling into other options. Volatility is pretty darn high in this thing. The 5-level calls are still trading at a 167 volatility. Jan 5 calls are trading at 131 volatility. So, there's some juice in there for this particular stock. Now, earnings are supposed to come out the 6th, and it looks like they might have reported a little early. So might be worth checking out a little bit more information on this particular name. But again, you have a 43% move. It's probably worth taking a look at to see what's going on. And that is the odd block for today.
And thank you for being so odd for us. We always appreciate such things. And now we're going to dive into Mark's favorite section of the show, Listener Mail.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
And welcome to Mark's favorite section of the show, Listener Mail. The rest of us can't stand it because never mind. The rest of us like it as well because, on a serious note, we like hearing from you guys. You guys have made this show a tremendous success, and we'd love hearing from you. So good, bad, or indifferent, please send us as much mail as possible. We love it. First question that we have, I'm going to give this one to you, Andrew, because I have actually not heard this term. This one is from Uncle Al. I've heard the term market taker many times in regard to options exchanges. Can you explain what this term means and what traders should be aware of? Thanks for this fantastic program.
Market taker. Well, it is the opposite of a market maker. And most of the quotes you see on the screen are generated by market making firms. A market taking firm essentially just lifts the offer. So if there's an offer for calls out there, market takers just buy them, right? So most of the public is a market taker or just hitting the bid. So essentially what you're doing when you're a market taker, you're removing liquidity from the marketplace. You're not adding. And the difference is now all the different exchanges have different, basically different pay regimes for if you're a market maker or a market taker. Some option exchanges will pay you to take liquidity from their exchange, and some option exchanges will pay you to provide liquidity on their exchange. So what you need to be aware of is kind of where you route your orders and what that exchange's basically payment for order flow regime is, depending on, whether you're taking markets, just basically lifting and subtracting liquidity for the marketplace, or adding liquidity to the marketplace. And that's, I actually have a sheet of all that, of all how the different exchanges handle different types of orders. And if you send us an email, send me an email at andrew@optionpit.com. I can send that to you. However, I will say one thing. A lot of exchanges or a lot of broker-dealer firms, in order to get lower rates, route the order flow for you. And you're going to be charged more money if you don't use their order routing, essentially. So it's kind of one of those subjects that I'm sure Mark and Mark talk about. We've talked about several times, just kind of making the whole payment for order flow thing sort of streamlined. But now exchanges have invested a lot in these different types of, very different types of option liquidity regimes, we'll just call them. And sort of that's what it is. So like anything, you have to do some more research to see how your order essentially is being handled, whether you're getting paid to provide liquidity or they're going to charge you for routing an order. Most of them aren't going to charge you routing an order. They might charge you cancellation fees or something like that. But there's almost too many variations to to list on our show. Let's put it that way.
Well, that's to add to it. A lot of times, like you had mentioned, how like some exchanges will charge you a fee for canceling an order. A lot of brokers, Options Express included, actually doesn't pass that charge on to you, the client. They just eat the cost. And so to the retail world, that's one where a lot of people don't actually see that. And just to kind of add to how Alex likes to talk about the walk limit feature at Options Express, that's one where they can do that on spreads. But the reason that that doesn't exist on the individual options is because if OX kept canceling orders left and right, then it obviously wouldn't be profitable for them. And rightly so. I wouldn't do it either if I were OX.
Right. So it's just one of those things, because those types of orders, different types of orders, just kind of gum up their systems, constantly. And I think part of this is, for high frequency guys, they're constantly putting in and canceling orders. And if you want to do that on my exchange, we're going to charge you. And
yeah,
I think that's
makes
sort of
sense.
It does.
All right. Next question. I have a question for Uncle Mike. I know him. He has discussed the problems with annuities several times on the program. I wonder if it's possible to construct my own annuity using listed option contracts. Well, a couple things. Just once again, I always want to clarify my position on annuities. They're not a bad thing. They're a tool. And by tool, it means that if you have the right situation, then the tool fits very well. So, for example, if I need to pound a nail into wood, I use a hammer. I don't use a screwdriver. I don't use a torch. I don't use a saw. I use a hammer. My gripe with annuities is that oftentimes they're used as kind of the end-all, be-all for what tool you should use. So in other words, because of the fact that some of these annuities can pay high commissions, sometimes the rep or the advisor or whoever recommends the annuity can sometimes get tempted to use the saw to hammer a nail in, or use a screwdriver to hammer a nail in when the hammer was the right tool. And so as you're doing that, I think you really need to be mindful of what are you trying to accomplish with this annuity. Now, with that being said, one thing that I want to add to that is it possible to construct your own annuity using listed option contracts? I think it is, in that I think that you can create a portfolio of efficiency using options to kind of give you the same thing as what an annuity does give you. Is it going to be exact? No. In some cases, it'll be a little bit better. In some cases, a little worse. If you're looking at annuities and trying to see the concepts behind them, you'll notice that all of them are very much give and take, meaning if you want to have this guaranteed stream of income, that's great, but maybe the rider costs a little bit more for it. If you want to be able to make more money, that's possible, but you'll have more risk involved, and vice versa. The point is that you need to make it so it's constructed for you and what you want to do. One thing that I recommend doing that a lot of people do overlook, in my opinion, is making sure that you have a tax efficient setup with your risk managed investment portfolio. So for example, let's say that you have a majority of money outside of your IRA and you have a small chunk of it in your IRA. Perhaps what you can do is use call options in the IRA. And once again, this is assuming you're a long-term market bull, and use the call options to profit. And outside the IRA, you use perhaps municipal bonds, depending on what state you're in, maybe cash value life insurance, or a whole variety of other tax-efficient instruments. Maybe there you could use a fixed annuity of some sort. Who knows? But my point is that you need to look at the overall picture. In terms of constructing the annuity contract, if you're looking for the cash value or the income guarantees, a lot of that's done on the inside of the annuity with options or futures or something along those lines. So is it possible? Absolutely. Can you do it yourself? There's ways with which to do it, and I've built a career building various customized risk programs. And if you have any questions on it, feel free to give me a call or send me an email. I'll even give you my direct line, 312-212-3531. Give me a call and we can talk annuities and options. All right. And now, before we get into around the block, folks, I do want to just say kind of a quick little public service message. And that is, I've said it before, and I always say it when we do this, never in the history of the entire stock market has there been a better time to sell. Now, does that mean that you should sell now? Well, my opinion, I'm leaning a little bit bullish right now. Next few days, I'm what I'm calling unknown, but over the next couple months, my opinion, I think I'm a little bit leaning to the bullish side. In terms of should you sell right now, like I said, I'm a little bit bullish, but with that in mind, you've had some profits right now. If you've been bullish this whole time, doesn't hurt to take something off the table or possibly put on a collar or manage risk in one way or another. There's a lot of ways with which to do it, and options can be a great tool for doing such a thing. So with that in mind, let's go to around the block.
Around the block.
Andrew, around the block, what are some things you're watching? I see we had Google earnings today. We had Goldman, IBM that came out. Any stocks you're watching or any politicians that you're just waiting to hear say something interesting? What are you looking at?
You know what I actually have is my surprise is that no position in it now, but the treasuries are making a bit of a rally, which still has a head scratcher. How far that's going to go on, how the euro can make these near-term highs against the dollar. It's a little bit of a head scratcher, mostly because it took, even though you had this, a budget issue in the U.S., they solved it in a couple of weeks. I mean, how long did it take them to kind of solve, which is not even solve, kind of this Greek issue, all these issues in the Eurozone. So they're still at it 2.5, 3 years later. And we can solve our problems relatively fast when Congress puts their mind to it, apparently, right? Deficit's down by, 50% this year? Wow, just with the wave of a pen.
So they say. Yeah.
I know, so those are two surprising things. So I'm keeping an eye on those. And also, I mean, I'm kind of looking for the ugly stock dance at this point, looking for sectors that have performed kind of poorly this year, maybe seeing if their prospects get better. I kind of do that sort of toward the end of the year. I sort of start kind of bottom fishing around, look what might be interesting for next year. Just solid companies. And again, watching volatility as it kind of makes this new low. And that usually brings out some, to me, usually like kind of call buying opportunities when the vol gets this low. Like you said, I'm still a little mildly bullish, but now you can start buying, longer term options, riding the short term options out of the money against them, and kind of setting up some pretty nice looking ways to get long. So I don't, not disagreeing with you. Which stocks, I still like kind of the Microsoft. I still like Intel. I still like Facebook. Zynga, I'm about rolled out of. But this year it treated me a little better than it did last year.
You love that Zynga.
Well, I don't really love it. I like, again, it sounds funny, but it's actually been a much better long gamma stock this year, much better than you would think. So, that's kind of the stuff I'm looking at. But I think, unless we have, it actually starts to make money again, even if it makes a little bit of profit, we could get like a Groupon out of it where they sort of wrote these business models off. And now they kind of come back from the dead. So, not that it's going to be a high flyer, but it doesn't take much. SoftBank just bought, what was it called? Supercell, which essentially is the same kind of business model as Zynga. And they paid like $1 billion for a stake in the company. So maybe the model's not dead. That's sort of what I'm saying here, but we'll see. But that's the kind of stuff I'm looking at right now.
Sounds good. Sounds good. Well, that concludes today's show, folks. Just want to say a reminder, this coming week at RCM, the webinar train is running again. I'm going to be doing a spread trading webinar on Thursday night, spread trading for sophomores. So if you have any interest in that, send me an email, mtusaw@rcmam.com, or go to our website. I'll be more than happy to get you the information on the webinar. And Mr. Andrew, what do we got going on in the pit?
You know what? Mark's been out. I've been busy. So we really don't have any new events planned. But, again, our gold course, you can sign up for our gold course for November. We have a couple slots open for that. We have launched a new platinum course. And the next starting date will be December for that, which is basically advanced option trading. Basically ways to collect basically a premium or theta positive type and also long gamma type trading, which don't really get to see sort of either the types of strategies that we look at. It's not stuff you're going to read about in books. Let's put it that way. That's kind of what we got going on. We're just sort of trucking along.
Sounds good. Well, folks, as always, it is, when you're listening to this, it is Expiration Friday, so make sure that you've taken your position risk or viewed your position risk accordingly. If you have any questions, call your advisor, call your broker, call somebody, but don't sit by and be dormant, because that's when problems tend to happen. We would like to thank everyone for coming. We'd like to wish everybody well, and have a great day, guys. So long, everyone.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.